Good morning, folks. How are you? Did you all receive the chart regarding the not cable, but the fiber? Okay. Okay. Good morning. Good morning. How are you? It is being recorded. The recording's already started. All right. So what we have in play for today is very classic run up before non-farm payroll, and there's a really nice liquidity pool that's still exposed in the marketplace right here. Yesterday, we saw the euro dollar run its um, same area, same time that this created these equal lows. The euro created its same buy stop liquidity pool. We were able to run those out right over here. And we're looking for a continuation on the upside for euro dollar and cable. It may be a little bit of a carnival ride today. We may see both directions nailed. But we're primarily looking for this run on the dollar, running down below that low. So let's draw a line out on it. And again, do not trade on any of this today. Don't do it, because I don't do it. I'm telling you, don't do it. But the stops below these lows in here, they will run them, and it'll be interesting if we go down there. Will we snap below that equal low area, in other words, trade below this level, and then run right back up and close in this range here? Or will we break down further and go down to around here, around the 94.80 to 94.90 level for the dollar? And if we see that, cable and euro will have a lot of room to go on the upside. Cable does have that exposed range in here. I don't want to chase the idea that this range in here won't be attacked as well today. I mean, because we basically cleared out these equal highs with this run up in price. Get this thing out of my way. So it'll be interesting to see if we just poke our head above that level here on cable and then come down. If we do get the scenario we were looking for, or I was outlining here, right, if we take out these stops and then run back up to try to close in this range in here, which, you know, I'd rather it not do that personally. I'd rather it come down here and close in some of this. But let me see. We got this one. So 95.20, 95.25 downside on dollar. I like the fact that we came up right off of New York's midnight candle, Judas swing up, and it's been building in a little bit of a premium, and then I think we're just going to roll down at the release in about 10 minutes. And for euro, we saw the same thing just in reverse. Equal highs left in place. Markets dropped down into Judas. Now for a demo trade, okay, demo only, we could watch this level here, this down candle in here. And its high is 111.85. So we can watch the sensitivity on that for a potential pop. Gunning for the liquidity above these equal highs in here. So there's liquidity resting right above that. In other words, they're buy stops. Okay, and let's go back out to a little bit higher time frame. Yeah, so we have a little bit of a range in here that we could close in. The open on that, I'm sorry, the low on that is 112.84. So we can see about 100 pips if we get volatility with the dollar going lower. So we could see a potential range of 100 pips on euro dollar. Not. Let me see here. 112.60. What is this? Yeah, 112.60 to 112.80. Could go as high as 112.85, 87. But we're looking for a range of about 65 to 100 pips potential on euro dollar. Cable, I'm not too concerned about. I don't like this exposed buoy in here, and the fact that we have euro pound still in its close proximity to its bullish order block in here. This could get eroded today with non-farm payroll. I could care less about that. I'm more focused on the euro dollar. I saw a tweet, or not a tweet, I saw on the forum, this was a repeat or a mistake. It's not a mistake. I'm saying the same thing just in two different ways. In other words, if the euro pound can go up or is poised to go up, that means that the euro, which this is a mistake, I don't have an O in here. Now my OCD is flaring. For euro pound to rally, the first condition that's listed here is that euro is in consolidation. It's not going up or down. It's staying in a sideways range while cable drops. That will allow euro pound to rally. Or euro pound being bullish can occur with the euro rallying up and the British pound going consolidated sideways. Both of these two scenarios can cause the euro pound to go up, either one of these. So that's why it's important to understand the relationships between the two pairs and the correlation, because one of these events can be the catalyst for this particular pair to go up, and you would just reverse this to get the scenarios when the euro pound is bearish. So again, our focus is primarily on the dollar, likely to run down, hit this level, 95.20, 95.25, and more specifically, we're going to be looking for a run down below 95.50. So we want to see a sweep down below that. It's definitely going to happen. There's no way they're going to leave this in play with a non-farm payroll event, even if this thing goes up and goes vertical straight. You know, to close in all the range here. But our euro dollar is the one we're watching. Okay, just for demo purposes only. Okay, I'm going to be looking for a move down into this candle here. Again, do not trade this with your live account. We're just doing it as an exercise. Okay, what we're doing is we're going to be, if it can get down to this level here, as soon as it hits this candle, if it can, I'm going to hit buy. Okay, and I'm going to wait for a run up to 112.50 to 112.60 if it can run that far, and even if it even gives me an opportunity to get in it. And then I'll look to take profit there. Demo trade profit only. And the stop will have to be 35 pips on this one. Yeah, I'll have to explain that when we get into it, if we can get the order. The recordings are going to be, well, all the recording links have been tweeted. So just go through all my tweets on ICT Mentorship. Every session that's been done this week has been linked and shared through the Twitter feed. You just got to go through the Twitter and just find it right now, because I'm still working on the organization of where I'm going to be placing it in that form, or if I'm even going to be using that form. Yes, all the sessions are being recorded. Peter, I didn't send the question and answer portion because that's like the longest thing on the recording yesterday, and I wanted to get the analysis side up first. And now that I have that out of the way, I'm just going to send a rough copy of the last portion of yesterday's sessions, the third one, where you'll actually see all the latter parts of the analysis, and then all the question and answer. I don't see it that far down, 111, Robert. We're going to contend with this range in here. All right, so watch this order block right in here. Now you're going to see the reasons why I don't like non-farm payroll, because in non-farm payroll, while this would be a really nice area to be buying normally, they can jump right through that and then ultimately still go where you want it to go. So that's why it's important that we do not take live account trades on this information today. I'm stressing it on non-farm payroll Fridays more than I do any other time, because it's very easy to get hurt. Nope, didn't give it to us at all. It's immediately ran for the stops above here. Pound, no, nothing. Dollar swept its stops already down here. There we go. There's what I was telling you may happen. They'll gun through the order block and still go where you want it to go. Again, we're looking for that 112, 60, 112.50, 112.80 as an upside. almost at both levels we called for. Downside objective for dollar. Well, essentially it did hit it because we gave 95.25 to 95.20. So far, 112.52 is the high on this candle. So we got our 112.50. Pound just poked its head above the high like we were talking about. So I wasn't terribly excited about this one. And back to the consolidation, or middle of the range now. You'll learn by studying non-farm payroll that the initial entries, like we were describing the bullishness for euro this morning and potentially looking for a long in here, actually started jumping before the numbers release, so it didn't give me an opportunity to do anything. But the order block for entry purposes, when you see non-farm payroll conditions like this, well, any non-farm payroll really, the entries are always going to be sloppy. In other words, you'll see a reason to want to be a buyer if you were forced to take a trade by impulsive or emotional commitment to being in the marketplace on non-farm payroll Fridays, which is what you're not supposed to be doing. You don't want to do that. Don't submit to those emotional draws or greed, thinking you're going to make a lot of money real quick. They're exciting to watch, and they're neat to to study and see if the things that we look for still come to fruition. But you're going to see that many times that the order blocks that you're expecting to give a bearish sell at or a bullish buy at, they'll gun right through them. They'll blow right through them, and the idea that you had will still unfold. That's why I tell everybody don't trade it. What's amazing is the other side of the release. In other words, once the numbers have been released and the volatility is already in play, the order blocks become very efficient then. You'll see them, they'll be reached into, and many times they'll cap price exactly how we would expect them to. But the entry, because they know everybody is trying to get in, okay, it'll be a large sweep above a high if it's bearish, or it'll be a large sweep below if it's bullish. And not that this is a lot of range, but it did take out the order block in here, which would, in normal conditions, negate the buy. So you're seeing a lot of volatility in such a small little time frame, and that's why it's not a high probability day. You just don't want to be trading this day. So let's look at pound dollar on a 15-minute time frame. It still might go a little bit higher. Could go to 33.45 to 33.60. Good morning, Peter. Yeah, I'm going to be doing the end of week reviews on Friday evening. That way I can keep my weekends as open as I possibly can with my family. So that way we'll know what we're expecting to see on Monday morning. I'm not going to be doing anything on Sundays. I'm not going to be doing anything on London on Monday either. Any wicks relative to non-farm payroll will be, there we go, we're almost going to hit our objectives. The wicks that are created for non-farm payroll, they have to be considered as a stop run. And many times, especially if they go up there and they come all the way back down real close to the pre-release at 8:30 New York time. we'll dive into all that, Robert. What it's okay. Question is by Peter says when price gyrates around like this, is it really pairing orders? Pairing orders is not happening after a range has been penetrated. Right now, it's just looking for another area of liquidity to build up. And there's a lot of traders that sit on the sidelines and then they'll trade after the first 15 or 10 minutes goes by. And then they'll go and they'll either try to sell a rally like this and they'll start to back it off a little bit, okay, and give them a reason to feel like it's safe. And they'll put their stop loss in, which is going to be a buy stop above the high it's already formed. And then they'll gun it through and then they'll use those orders to pair. So to pair orders, they have to engineer a sentiment, and as a lot of traders, and please take this with the utmost respect because this is the only person in Forex I do have respect for. But Chris Laurie doesn't believe in sentiment, and I watched him one time talk about, if sentiment is in the marketplace, you have to convince me that, what's the sentiment here, and what's the sentiment? Well, and the sentiment's always shifting. The market maker will influence market sentiment on a short-term basis, especially during intraday. So traders have already seen this wick in here. They're going to be wanting to sell it. And by doing this backing off here, okay, it's kind of like laying bait for people that will want to chase price, saying, okay, I want to sell it, but I want to know that it's going to go down a little while. And once it starts to go down, everybody's going to put their stop loss right above this high, which is just right below where we're looking for a daily bearish order block. And then they'll gun it through and punish them. That's why it's really important that you know that this day is not worth trading. It's not. But it's immensely interesting to trade with a demo account or to study it, because you can really pick apart non-farm payroll on a psychological view and get to the heart of really what the dealers and what the algos do. It's such a, to me, it's a fascinating thing. I watch every non-farm payroll if my wife permits it. If my wife has something we're going to be doing, obviously I can't. But generally, I try to sit in front of the charts and I watch non-farm payroll all the time because usually it sets the tone for the first 2 weeks and sometimes the entire month, and it kind of acts like a Judas swing. And we'll talk more about that tonight in the weekly recap. So, what am I saying here? We have a group of traders that want to be short right now, and they're gonna have a stop resting just above at 112.53. Okay, so the algo has backed off 20-25 pips, giving them a reason to trust their analysis, trust their system or whatever it is, and then one more time they'll gun it up there and clean them out, even if it goes lower. That's the danger of trading in non-farm payroll, because it'll give you all the indications that the high and lows formed, and they'll come right back up there and take it out, or down there and take it out, and it can go right back to equilibrium in the middle, and you can just trade nowhere the rest of the day. It is very fascinating, Andreas. Uh, the following week, Tuesday, the question from Blind Frog was, how long will it take before I consider it a normal, I guess, normal condition to trade in? For non-farm payroll, I like it the following Tuesday. It only takes a day or two to shake out the dust, unless it's a massive unexpected number, which is really never unexpected. Somebody knows what those numbers are before they're released. Is there a way to read the forecast for the news, meaning taking an educated trade in the direction of the news? David, if it can be done, And I don't have an opinion that supports that idea. I think when it's right, you're just lucky. Because again, like I mentioned in many other times, I believe that the fundamentals, unless you're at an institutional level and you're involved with it on a day-to-day basis, you aren't going to be plugged into what the real fundamental or the news are going to be giving us. And plus, the news is actually late. If it's being released at these specific scheduled times, that means that information's already been compiled, it's been used already, it's already in the marketplace. The market's already priced in all these numbers, which is the reason why I tell everyone that I don't look at the numbers or the data. I just look at the time when that data is going to be released, and I know that it's going to be an injection of volatility. It completely negates the necessity for me to even worry with what the ramifications are around that report. I just know there's going to be excitement, and as a trader, we need movement, and we understand that the market's going to seek liquidity. It's going to be reaching above the marketplace or below the marketplace for that said liquidity. And in normal conditions, it's just like non-farm payroll, but non-farm payroll speeds up what would be like an entire day or two's worth of price action. They compress it inside of many times just like a 25, 30-minute span of time. And that's why it's so erratic, because it's doing, the algo is doing exactly what a normal 24-hour to 36-hour range would be over a course of that many hours. But because of the nature of this particular day, it unsettles all kinds of positions, and it upsets the marketplace on a near term, and it breaks market sentiment. That's what it's designed to do. It's designed to do that. You think it's ironic that it's at the beginning of the month? No. And they do it on a Friday, so that way it screws everybody's perspective up, so that way you don't know what you're supposed to be doing. Or should you be aggressively tightening up your stop going into the next week? And then they do the traditional market runs. Make a study of it every single non-farm Friday. Go in and study it like we're describing it here, and you'll see that there's a rhythm to it. There is a way that you can, obviously we were talking about it going higher, reaching for where it's reached into. It's still falling just a couple pips short from where we were looking for ultimately. But to me, it just looks like bait. Like, they want these traders to feel like they're safe to be short now. The worst is past, so now it's going to be a sell-off. And I don't trust that on non-farm payroll. I just don't trust it. And I've seen them many times lay this trap out where the short sellers will be in play, and they'll watch the range like we're looking at here, and they'll feel like it's okay to be short, and they don't get to hold that position long. They get ran out. Go ahead and ask them, David. Can I show where I got the level 1180? I'm not sure what you're at for the euro. This one here, where I got that level. Well, we were looking for 111.80 yesterday as an upside objective. Hang on, guys. I'm getting stiff-legged here, sitting with my legs crossed. We were looking for upside objective yesterday for 111.80. An 80 level is always influential because the banks are going to populate orders around that level. And if we're trading above it here, and we looked for it when it was below the market over here, we trade up to it, and we call 112 big figure. Okay, and if we are going to go higher and we're consolidating around the big figure, like we're here, 112, that's what this is here, 112. We consolidate it and we dip down just to go into 80 again. Okay, and once this occurs, if we're fundamentally poised to go higher based on our higher time frame, then if we're trading at the big figure, many times it'll drop down 20 pips or so just to find support or recapitalize an old institutional ordered level like the 80 level. When it hits that, there's usual sensitivity there anyway. They swept it here. See how there was already existing support? They ran through that. But 111.80, that's just you want to have the one, you want to have 0, 0 levels or the big figure numbers on your charts always. You want to have the 50 levels, okay, and you want to have 20 and 80. Every single chart that you look at, they don't have to have the lines there. Initially, I tell everybody on Baby Pips, they have to have those lines on there because I want you to see the sensitivity of these levels. Once you understand and remember that those levels are what they are, every time you're studying price, like I don't have those levels on the charts all the time. My charts are pretty clean most of the time, but I'm usually looking over to the right side and referring to where I am in proximity to those levels, the 80s, the 50s, the 20s, and the big figures. But 111.80 is an upside objective that we were looking for yesterday, just for institutional order. And over here, it was inside this void that we talked about in yesterday's presentation. So inside this void, we're expecting it to be filled and run these stops. But because I want to get out early, I'm going to look for the institutional level before all the extra last bit of the move would be seen. I want to get out before all that. So I guarantee myself, well, I shouldn't say guarantee, I increase my odds of getting a favorable exit by getting out a little bit early. So I still have a nice, handsome profit. I'm just not demanding the best exit. Hang on one second. I don't know how to get that information. David's asking, where can we get those numbers beforehand? I don't know. It's best to stay away from non-farm payroll and trade after. Yeah, trading after today, it becomes normal. Usually it takes a Monday to shake out all the wrinkles that is created by the volatility on this particular day. Yeah, Leo's saying that he didn't get this in this wick here. And that's the part that your individual broker will do. See, they have the liberty of expanding the spread around high impact news, and that's why you'll get burned with them. So just be aware that that's all normal. You signed the risk disclosure, and you agreed that they can do that to you by opening an account with them. Yeah, some of you are actually saying your platform froze right before the release. I think that's just the brokers doing that. They do that to mess with you because they know the likelihood of somebody being right just by luck is there, and the volatility on this day can sometimes be very quick and put a lot of pips in their hands. Mo, I'm going to keep your question up. I'll come back to it. And I see it's about the dollar yen. I just want to focus on this one right here because if I jump around too much, it'll be too complicated for me to keep my focus on what we're looking at here. That's a good question, Ron. Ron's asking, how do I know which pair to put more attention on? He says he focuses on cable mostly, but how do I know when to focus on the fiber instead? Number one, it's experience. And two, you'll see things that you'll learn over the course of the next couple months where you can weigh out more favorable conditions over one pair versus another. Looking at cable, we pierced the high. We're going to see if we can hold on to that or if we're going to find some support down in here. If it comes back down through it, it can still find support at this candle. close at 133.02. So 133.05 to 133 big figure. If it loses that, watch for the run on this low here. Okay. To me, I think the trap is set. They gave a nice another opening candle here on 15-minute basis and dropping lower. All the liquidity still now stacking up here. A lot of people want to sell this thing that are retail. I'm not well rested, no, Brian, but thank you for asking. Yeah, I see a lot of folks talking about the forum. I'm still up in the air about what I want to do with it. No resolution with PayPal. It's still locked down for 100 and now I guess 79 days. Bustin did the 15-minute order block on London lower high always hold up for New York open entry or sometimes get turtle souped. there's conditions that I'll teach you regarding market reversal profiling and seek and destroy. Both of those conditions will take out the London high or low, and depending upon the conditions around that, it can either mean it's going to go back to the equilibrium after it runs that, or it can be a completely reversal, and you want to be positioned to take advantage of that. But it's a pretty big subject matter. It has to be dealt with on its own. But when it's not those two conditions, you'll see that the market usually it supports its higher low formed in London, going through New York. Well, this is New York midnight in my platform. The question was, is why am I using 4? Because of daylight savings time, this platform and where I am locally, it just, that's where it is. Okay, our lower level objective for dollar was hit. Okay. For some of you new traders in here, and I'm not asking to know which of you are new, and when I say new in regards to my material, when we see these things unfolding, that's what I was trying to tell you yesterday, that folks that have watched the recording and that were live. If you have always wondered if there is a consistency that's available to those that know what they're doing, I think in short order, anyone that's been paying any attention to my work just for the last 6 months of this year, where I've been actually being revealing more about what I expect to see in the marketplace, whereas I never really used to share that information. I was wanting people to find it on their own. I think that the concerns you have as a new trader or someone that has been trading for a while but has never seen consistency or a measure of knowing what to anticipate. That's Bella again. Looking for a consistency or an approach to finding a way of determining how the market should trade. I believe that you have found what you've been looking for in this material, not just me, but in this material. And if you submit to the time that it's going to take for you to learn it, because it is a lot of information, but it will be easily understood if you submit to the process of going through it all. It's just like anything else experience. but I believe me, I know what it feels like watching it, because it feels like you can see these moves all the time. Why aren't you trading every single one of them? And that comes with the seasoned veteran in me, where I know I'm not going to always be right, and I only want to trade when it's really highly favorable, and those conditions are actually being taught to you in this mentorship. So while you'll have a million different setups to trade, and you literally will go into a chart and spend very little time dissecting what the market makers and what the algos are going to be doing next, and you're going to frame that in the format where, is it setting you up in a condition where it gives you a high probability trade with low risk, and it has a multiple that's favorable. We're going to be aiming for, the goal is going to be 5 to 1. That's your setups. You're looking for 5 to 1. When you finish the mentorship, you're only focusing on 5 to 1 setups. And believe me, you don't have to do very many of them to do exceedingly well. And you can take some losses, and it still won't do anything to you. You'll still come out with a really nice return for the month, and over the course of a year, it really compounds, and it does very, very well. I appreciate a lot of the comments you guys are putting in here, but I'm using the questions tab really just to focus on questions that are germane to the discussion. Is non-farm payroll same as repricing besides the news? That's actually a good question. It is essentially repricing. They're going to take price to a level that will upset the most liquidity relative to where price is at right before or right at the time of non-farm payroll numbers release. Okay, so in here, this is where we were at trading right before the release. We already identified where the liquidity was here. Okay, and by itself, it doesn't mean anything except for the equal highs. We noted that the range will most likely expand. Make sure I'm getting a high in here. Okay, most likely expand. Can you guys see, I'm not sure if you guys can see the numbers. Can you see the number to the right where it says 52/18? Can you see that? Okay, thank you. I'm expanding out till it gets to 20. And I'm dropping it right there. So that's the 20 pip grade on sweeps above the highs. That's about the maximum of the intraday. What's interesting is you can see the bodies of the candles, even though the wicks went higher, the bodies of the candles are staying right around that 20 pip grade on sweeping. So that's the violation you end up having to see on non-farm payroll. So even if this is going up to go down, the rules are still showing a, I guess, a consistency in terms of stops, but you're going to get a lot more wicks during a non-farm payroll or high impact release news event. Hang on one second, folks. Sorry about that. All right. Steven, I see your comment about $96.75 equal highs. Well, we never disregard it. We just have to put levels that aren't traded to or um, reached into. Very nice. Look at the reaction we had down here. So we came all the way up, down to the level we were looking for. Pierced it just by a little bit, which is not bad considering it's non-farm payroll, and came all the way back up. So we had a 30 pip run here. Watch the level under here. See if there's any sensitivity to that, and then another roll down. But on non-farm payroll, you can expect to see sometimes it come all the way back up and clear out the high, which is the reason why, again, I don't like this day to trade in. Okay, watch this one. If we lose this, they'll probably want to come down here and close this up. So we had 112.50 hit, went to 112.53, and we saw a dollar come down to our 95.20 level. Right in here. The low came in at 95.17, so it just went 3 pips below it. Liquidity's resting just above these highs in here. And if they run that, we'll be looking for this void in here to get closed up. Why not raid US dollar 95.50 lows also? I think that's what we already did, so it may have been, yeah, it's a little early. Some of these questions and comments are old. I can't keep up with everyone. You guys are firing them off too fast. Pairing orders is a concept that I'll teach in depth, so that way you guys know how to trade retail traps and also use those ideas for your exiting and your entering. But pairing orders essentially is when the algo goes above an old high, they know there's buy stops above that, and it'll want to go to that level, especially if it's come away from a low of a considerable price move, and it's basically them allowing their orders to exit along with a profitable, favorable exit point with willing participants to buy. And I'll teach all that stuff to you in great detail. I don't think that trading non-farm payroll at any capacity is something you should do, Benoff. But you're certainly welcome to risk your money. I'm just telling you, as someone that's been doing it a long time, it's just better to not do it at all. It's really, I don't know what the fascination is with this. I think it's a male thing that we have to conquer everything. But I gave it up. I just don't want to do it. It's not, to me, it's just not consistent enough to give me peace of mind knowing to put money in. And if I'm not putting in at least enough money to be concerned about, I'm not going to take the trade. So I'm not going to even risk that much on the low end in a day like this. It's just, to me, it's something that's, it's an anomaly. I study it. I'm fascinated by it, but I'm not going to trade it. It just takes discipline, and you'll get there. I just realized I forgot to hit the save, unless I can still do it. Let me see if I can still do it. Save question log. Yeah, let's do that. Because I know I'm going to probably forget some of you. Non-farm payroll attacks any nearby liquidity. And it could be in the form of funds or it could be transactions. Think about this also. There's a lot of global commerce and exchange that has to take place for businesses. For instance, like Apple. Apple has to do things internationally, and they have to sometimes prepare funds in exchange for business deals, mergers and acquisitions, all those types of things. And they have to convert their currencies to another foreign currency. And they will set those funds up at the beginning of the month. So that way they're ready to go and they're in reserve so that they can put that money to work when they need to. And it just happens to be around the beginning of the month. Non-farm payroll attacks that as well. Yeah, Herman, I don't get into all the specifics about, you know, ISM and all the data itself. I mean, clearly, you didn't hear me one time say anything about fundamentals, about what I think the numbers are going to be, if they're going to be good or bad for the dollar. I didn't say anything about that at all during this presentation because I don't believe in it. I think it's already been factored in the marketplace, and the market went to the levels we called for in the direction we called for before it happened. And I'm trying to communicate that while that's probably something for someone that's smarter than me, I don't claim to have the intelligence to be able to discern all that data. I tried. I mean, Chris Lurie has a really good fundamental course where he teaches global fundamentals and covers a lot of that stuff. I just don't have the capacity to know what all that stuff means. And frankly, it's too boring. I'm going to be honest with you. I'm just bored by it. I understand price. I know that there's going to be a lot of movement around these releases. And if I understand price, I already understand what the market's going to do. And the market's going to either, now think about this. You ever hear the term, okay, we had good jobs numbers, okay, but the market discounted that and did something else. I only had to hear that a couple times in the beginning of my career to realize that I'm wasting my time with this, because if the fundamental numbers are what they're supposed to be, then there should be zero deviations from the outlook on price when these numbers come out. If they're bullish, the market should perform bullishly. But when it doesn't, they just have an excuse about, oh, well, they discounted it. So I don't need to hear that many times before I realize it's BS. So I just went to the heart of the matter. What is price telling me? Because it's all going to be in price before the numbers actually come out. So I don't waste any time with wading through bank reports, fundamental data. I mean, I get a lot of people that will say things against me because I don't talk about that stuff, but I mean, you're seeing it. I don't need it. And if I can do it without all that stuff and be able to call the levels out before it even happens, you can do that stuff too. It's not necessary to have all that. Now, I think it's probably good for fundamentally long-term position trading. I think then, yeah, obviously it has a lot more merit, but on the near term, especially when it relates to day trading, there's no influence whatsoever on fundamentals. The question is how bank traders can control price, put orders at that speed. Okay, the okay, I'm gonna answer it because there's really two questions there. The speed at which you're seeing non-farm payroll happen is because of for instance, let's just say I am at XYZ Bank, and I'm not going to put a label on anybody and vilify anyone, but let's say I'm at XYZ Bank, one of the big ones, and I have the ability to push price around. If price is trading for let's go back to the euro. Okay, if price is trading here, and I've seen other people try to explain this away, but I'm going to tell you really what's going on. When price is trading around the 112 big figure here, pre-market release on the non-farm payroll, common sense tells you that there's going to be orders right above here. okay, because it's equal highs, and we know that clean levels are not going to be maintained, they're going to be rated, okay, and price did not go up there yet until right before the numbers release. So when we have these conditions and markets trading pre-market release on a big impact news event like non-farm payroll, me at a bank, okay, because I have deep pockets at my exposure, I can disposal rather, I can cause a great deal of interest at a level near or close proximity to where the market price is right now. So here's what generally happens. I know that I can see a potential to run these stops out, okay? This is what they would do before it started going electronic. Right now, from the central bank level where the market's feeding you price, that's all predominantly electronic now. There's really very little human involvement. It's all basically algo, and they just know that these same principles are at play all the time. But it started with a human element. So at the central bank level, this is what would happen before we went to electronic. A big bank would communicate with another big bank, okay, and they'd say, look, I got a large block that I can push into the marketplace, but I want 112.35 or better, which means that the other bank will look at their book and say, okay, do I have anybody that wants to buy, okay, at that level or higher? I know I want to get price at 112.35 because if I do that, if I can get one print from the market, one trade prints at 112.35 or higher, that's what I mean by better. If I can find another bank that will take the other side of that trade, together we will blow out these stops over here in this orange area. So what I'll do is I'll call around to a bank, because all the banks work together. Say, hey, look, I got an offer at 112.35 or better. You have any takers? The guy at the other end, another bank, he'll say, okay, let me see. He'll go through his book. Is anybody who's willing to buy up there? And he'll say, yeah, I got a buyer. Boom. I'll put the order in the marketplace. He'll pair his party with that. The market will print. It'll jump up real quick and shoot up there at 112.38 or 112.35, whatever the order is that they agree on. They pair those orders up together. As soon as the market prints that, your charts will reflect that that's where the market's going, but to us, it looks like it's like moved supersonic speed. And Chris Laurie will say it's a lack of liquidity. It's not. It's not that. It's actually a higher pairing of big, bulky orders, a large volume of orders. The market's going to go and facilitate that trade immediately at the interbank level. So when it happens, it causes this huge gap, and it looks like to us, it's speed, and it is speed. But what it is they're taking those orders and they're pairing up a large block, which will cause the print in the marketplace. And then once one price is traded at there, once it prints, any order over here becomes hot and then becomes a market order to buy at the marketplace. And it floods the marketplace with sell orders to be paired with those buy orders. In other words, anyone that's long down here, when we get to this level here with this opportunity that used to go on when it was non-electronic, that would facilitate that run on the rate of stops. And it's the same thing that the pit traders would do in the floor of the S&P and the bond market. It's still, it's still the same premise. Find a willing participant above an old high to match with, and you'll gun the stops. And when that happens, it creates a rush of orders that come right in the marketplace. And you can do what? You can sell all your long positions here to willing participants to buy at a really high price. And it's engineering liquidity. It's all it is. I spoke about many times, move up yesterday and then consolidate and then give it another leg up. I don't think that's the condition that's usually seen in non-farm payroll. Non-farm payroll kind of looks like a heart attack. It's real quiet right before the release, then it spikes up or spikes down, and then tries to usually come right back to the middle. Um, I'm not sure what you mean by a decision point, Scott. The question from Leonard is the 8:15 candle safe? I guess what you're asking is this the low of the day? Personally I believe it is because they ran those first and they expanded price on the upside. I think that they're probably going to run that 112.53. If not today, they'll probably do it on Monday. Okay. If you're not getting notifications, I've already tweeted this. It's because you have not activated the Twitter notification. That's something you have to do on your end. I can't do it for you. So go into your Twitter settings and then, or your phone or your device, and allow notifications to come to you on that device or that phone through Twitter. Why is Aussie New Zealand affected by this news? Uh, Anything that has anything to do with the dollar is going to affect every other currency because the dollar is the greenback and it's the reserve currency, whether you want to acknowledge it as so or not. But the point is that the dollar is king. So if it moves up or down a lot, it's going to have an effect on global exchange because a lot of goods, especially oil, is bought and traded through dollars. So every currency is going to be subject to volatility in the dollar. Yeah, we like to study the market after non-farm payroll closes for the week and just then go into a fresh week with those expectations already in the charts. I don't ever really try to give any kind of indication what the next week's going to do because non-farm payroll is an animal and it can do all kinds of things that you think it won't do, but it will. And again, these are all reasons why I don't trade it. I've recorded live trades before. So throughout this year, I think I did 3 of them that were recorded, where I actually did trades and show you that I can, if I'm really forcing it, I can trade it, but I don't like to. I'm not comfortable doing it. And we were able to call the market again this morning. So again, just because we can do it doesn't mean we should be in there doing it. And then that's hard for you to understand if as a new trader. You're like, okay, well, you can do it, so just do it. And I'm telling you, I've done it enough to know when I'm wrong. I regret not listening to my gut saying just stay out. And I don't care how many times I do it right. I don't care how many times I call it accurately. I just know I don't want to trade in this environment because it doesn't make sense to me to do it. I can give up one day. I think 112.53 can still be traded to you. It may settle and go sideways the rest of the day. The reason why it has more likelihood to do that than run out 112.53. I don't think we'll lose the low here. Let's say it like this. I don't think we'll lose the low here. Two conditions. It's trading sideways and trades in the range that's created up here and in here. That may be the range the rest of the day. And the reason why I say that, if it's not going to run out to 112.53, or it could come up here one more time, tap the 112.55 to 112.60, and then come back down and settle going in consolidation again, because we have Labor Day holiday coming up. Everyone is really already on vacation. I mean, they're all ready to go somewhere and spend the last bit of sunshine, and just have fun and have cookouts and all that stuff in the States. So there's really a lot of money that's on the sidelines already, and you're seeing it's indicative of what we're seeing here in price action now. So the two conditions I see is that we stay in consolidation, we keep this low and keep the high where it is. Or we run up here, take the high one more time, and come back and go into consolidation still. But I don't think we'll lose the low on here. And if we weren't going into Labor Day weekend, I believe we would have already blown out the 112.53 high, made a higher high. Um, I'll say this because we're in this format and I'm not getting anything for this. Okay. I have traded with Oanda. I have traded with FXCM. I do not have any other retail exposure outside of those well-known Forex brokers that I could speak of. Um, I have horror stories with FXCM. I have, well, Oanda, um, they're okay. I mean, they're not the best in my opinion. I traded through um, Interactive Brokers, and everything else is in a prime brokerage, which is deleverage. You can't trade with leverage in that medium. That's all I'll say about brokers. I don't worry about the weighting in the U.S. dollar index. The dollar index is going to give me what I need to know, and I trust it. So I know there's a lot of folks that want to dissect every single thing out there. It's not necessary, in my opinion. I mean, I'm doing pretty good in terms of calling the directions when I need to know where it was most likely going to go. And that's all you need as a trader. Just tell me where it's going to go and when it's going to go there. Uh, just so you guys know, I got a lot of people questioning about PayPal. PayPal will not let your reoccurring payment occur, so don't freak out. I know everybody's panicking and stuff. Um, the account will not let any more money come in. Not no more future monthly payments can come to that account. I can't let a subscriber join up. Nothing. That money cannot be transferred into that account. They have froze that account and they're waiting for 180 days. After 180 days, the time lapse of someone asking for a chargeback will pass, and then they'll free the money up, and then I'm able to withdraw it and put it to use wherever I want to put it at. But I can't touch it. I can give refunds, and that's why I said the other day, if you're not happy with what you're getting, you have until Monday, to let me know you don't want to be a part of it, and it's no problem. I'll cancel. But going forward, when we arrive at how we're going to process the payments on a monthly basis, once the payment's processed, you're stuck with me for that 30 days. You have to deal with it. It's just too much work for me to be managing, setting up and deleting people, and it's not fun. This is one of the reasons why I kept from doing it for such a long time. Uh, you're not going to be billed. Yeah, you're not going to be billed next month. I have to find another processor to take your payments, and I can't answer that right now because I don't know which one I'm going to use. We have some time still. It's only the second day of the month. Andreas, I mentioned trading plans before people signed up. Okay, all the PDF files, people are asking for that too. Like, where's the PDF files? PDF files are the actual lessons, the teachings. So while you'll see teachings in video format, and I'll be teaching things conceptually through pre-recorded sessions, they're going to be accompanied by having a PDF file. So that way, if you are on the road and say your spouse is driving and you don't want to have the computer in front of you, or you can't have the computer in front of you, but you just want to study, it'll create an avenue for you to build a binder of all the things that I know. And it's going to start from the elementary stuff and then all up into the higher level stuff that you don't even know where you're going with it yet. But it'll be more refined in terms of all the components that you know now from all the free material. I'm giving you all of the places you plug in those individual components, and you'll have a complete trading plan. And I am giving you my actual trading plan for my day trading, my scalping when I do it, and it's not a lot when I do it, but when I'm active and I feel like I'm going to be doing a lot, you'll get that. You'll get my swing trading model, exactly what I do from the beginning, what I look for, what justifies the setup, what negates the setup, where stops go, where I take targets, what's the protocol I use for how much leverage, everything. Everything that my kids get, that's what you're getting. But you're getting in installments and small pieces that flesh out. And at the end, you'll have all of the trading plans given to you in the 12th month. So everything is given to you in a capacity that from beginning to end, you'll know exactly what to do because you'll have all the components and where to plug them all in like a flow chart format. So it's really easy to just look at where you're at in the marketplace and say, okay, I'm here in price. This is the condition. So what conditions do I trade with? And you go down into the flow chart and it takes you to one step, to the next step, to the next step, and it takes you into trade entry, trade management, and then trade exiting. And then it's the closest thing to having exactly what it is in my head. There's a lot of questions. I didn't expect this many questions for such a small little event. Okay, the question is why would big funds want to buy higher than the current price range? Because large funds are primarily trend following, and the trend on the euro long term has been down. So they'll use the recent highs to trail stop loss orders on their shorts. And to protect your short with a stop, it's going to be a buy stop above a recent high. And when the markets create these little clean little levels like this, it just generates an interest for people to trust that as resistance. And traders will use the same ideas that the funds operate with. They're going to lower their stop loss order and place it just above a recent high. And it gets nailed. It kind of I know the struggle you're having to understand it because it's like, well, why would anybody want to pay higher price than waiting for it to go lower? Because they're attacking buy stops on short holders. That's all it is. Where did I get the dollar index 95.20? Okay, FX Blue Pill. I'm going to go back out here. See this little consolidation in here? And then we had this real quick runaway. This is the last reference point or liquidity point. Let me just zoom in there. Oops, going the wrong direction. Here it is. Here's that little consolidation I was just noting, just zoomed in. The down candle right in here, I used the high initially, and you can see it's 95.21, and we round it to the institutional 20 level. So because we're expecting the 20 level, we always factor in a 5 pip spread for our trades, and using that takes us down to 95.20, and I said 95.25 as a buffer, so it may not reach that 20 level. It may just tap the 25 level, but it went down to 20. I think it was 23. No, it went down to 90. Why would I say 23? It's higher. 95.17. So I knew it was 3 pips difference, lower than we were expecting. So that's how I got to 95.20. I'm just looking for areas of where the last order block would have been relative to where price was trading up here. We have this one for the formula stops, but below it, the order block is down here. And we saw both of them, the rate on the lows over here, and then the next order block down here is where it was reaching for. So that's what I'm telling you. Over time, you're going to realize how easy this is to know what is the most likely direction and level it's going to reach for. And by having that, it removes a lot of the uncertainty about what it is you should be doing. And if you don't know these things, don't trade. If you can't discern where it's highly favorable to reach for, that's exactly when you don't want to trade. You know, that's one of the easiest ways to get to the sidelines is if you don't see clear indications of where the market may see a run on liquidity, run out stops, and then run for an order block, or close in a range. If you can't answer those conditions, that's exactly when you don't trade. And if you look back on all your other trading and we have these losses, you'll go back and if you're honest with yourself, you'll say, you know what, I really didn't see any of those things. I was just forcing a trade. I wanted to be in the marketplace. And that's what I did as a new trader. I did all those same stupid things. You're going to have to learn from them or get taken out of the business. Non-farm payroll affects everything. It affects, well, if equities were open, it would affect them too. But it affects their performance after they open at 9:30 in New York. Daniel, I think I just answered that question indirectly. More people learn this method of teaching, won't Diagos? No, I say this all the time, Mel. Um, they are not going to change the effects of willing buyers and willing sellers in the marketplace because there's fear and greed at play. There's always going to be people that are going to be involved in the marketplace. Obviously, funds are always going to be in the market, and that's really what the banks are going after. They're not going after you and I. We're too little. We're too little of a trader. Our liquidity is not in the market. But the way we trade, that same idea is seen in the realm of large trading funds. And the funds are always going to be in the market. So that's what I'm telling you. Don't worry about this stopping its efficiency. Don't worry about that. That's the worst thing you could be worrying about right now is, oh man, I'm going to learn something. And this isn't like the red light, green light turbo robot, okay, that came out when Forex became popular. This is how the markets book. All markets, not just Forex. Every asset class books just like this. So there's no reason for you to have any fear. That's why I tell everybody this is the last bastion of free enterprise, that you have the ability to carve out your own paycheck, make your own schedule, do what you want to do, when you want to do it, how you want to do it, and make this your business however you want to do it. You can do that with this. And this is the last thing on planet Earth that is like this. And here's the beautiful thing. Until the entire global banking industry collapses, it's going to be working. And I don't see the global economy collapsing anytime soon unless Christ sets foot back on this planet. And when that happens, then we got better things to worry about than trading. Right now, I'm just giving you the bare bones stuff to call the moves, but there's a lot more that's available in what we're going to learn yet. The question is there really secret sauce? Yeah, there is. I don't call it secret sauce. I had that given to me one time in a direct message, and I thought it was cute. All right, I had to log in to Twitter with my computer, deeper settings. Twitter will text you. Yeah, I think it's an SMS setting. If you click it to that, all my tweets will come to you like a text message. And I tested myself out. I only follow my mentorship, and my mentorship only follows my public Twitter. And I know when I send a tweet, my phone gives me a SMS message, which is like a text message like anybody else would send me. And that's the best way to get alerted to anything that's coming down the pike. Um, okay, I see your question. I've had this given to me a lot, either by Twitter, and I've ignored it on Twitter, and a lot of people have been sending it to me in email too. The Interactive Brokers have upped their margin and base equity for trading spot Forex. And I think they're smart in doing it because there's going to be a lot of volatility coming. And that's why I try to tell you all that there's going to be a really insane fall. I mean, we're going into a really uncharted territory in terms of volatility. And I think they're smart as a business, which is why I have accounts with them, that I think what they're doing is they're lowering their exposure to what is potentially coming. And it's all on the heels of what I've been talking about for a year and a half now. You know, the end of Obama's term you know, there's a lot of excitement coming. Okay, and it's just going to be a lot of, like I said, a lot of volatility. It's an election year. It's a very uh, well, the U.S. is a powder keg right now, and it's not just the U.S. There's a lot of countries around the world that have a lot of issues going on, a lot of uprising. You know, their people are going against their own governments. Um, you don't get a whole lot of media coverage on it, but alternative media is covering it, and you have to find that on the internet and YouTube. But generally, they get scoffed at. But it's hard to argue with, you know, what you're seeing when you see it, and when you know people. And I don't say I know people, but I have contact with people that live in these areas, and the descriptions of some of the things that they're enduring, it's crazy because you don't hear it. In the U.S., our news media is censored. So I think the people at Interactive Brokers are sensitive to what's potentially coming as well, and they're just being prudent about pushing that risk away from them. And they'll probably revisit it after the initial shock and all that comes by way of all the volatility, or they may not. I don't know. I'm not the business brains of that corporation or that broker, but there's still ways for you to trade. Don't be concerned about just because Interactive Broker did that. I didn't have any issues with Oanda except for when I was uh, positioning the 3.5% leveraged trades. They would say my order was off quote, or I couldn't get the fill in, and it would have to keep going back in, and it would usually be about 4 or 5 more pips above where I wanted to buy at. And I had one issue where they filled me 9 pips below the quote low, which I had an issue with. But outside of that, I don't have really any complaints. I mean, you're going to have a horror story to some degree with everybody out there because they're going to be you're never going to have a perfect broker. Uh, I have retail account with Interactive Broker. I have 2 of them. Um, they're not with my name. I do a lot of things through either an LLC or I do as a limited partnership. And I have 3 prime brokerage accounts. And a difference between a prime brokerage account and a retail account is what everybody else is used to seeing. You do a transaction, you pay a commission or spread, and then you deal with that broker, okay, either electronically or whatnot. A prime broker is, and you can also, in retail, you can leverage. Up in the States, it's to 50-to-1 leverage. I don't use that high of leverage, even though it's available to me, but I usually trade around 20-to-1 at the maximum. And that's rare that occurs, but nonetheless, the prime broker is basically you've deposited money with a bank, okay, and you trade via the bank. You're actually going into the interbank feed, and what's nice about it is, well, number one, you can't leverage. So whatever you have on deposit, that's what you trade with. Secondly, you are offered the opportunity to, like for instance, I can reject a price where you can't reject a price at the broker on a retail level. See, they're in control at retail. They can say, okay, you wanted to buy this, but it's off quote, or they'll requote you. As a prime broker account holder, you have that ability, and I can say, no, I don't want that price, and I have up to 5 minutes to change it. You can't do that in retail. I have to phone my orders in, which is not a big deal, but in retail, you are the you're the sheep, okay, and prime broker, you are on the same playing field with the bank. The problem is you can't just go in there with a $5,000 and say I want to trade prime broker. I mean, you got to have a large net worth. You have to have a good credit rating. You got to have a track record that's impeccable with low risk, consistency, and you have to have a lot of money, and millions of dollars. And it used to be you only needed $1 million, but they've been recently upping it. Yeah, I don't trade the dollar index or the dollar. I don't do anything with it. I think it's too thin to worry with, but it does help with prognostication. I don't think that 11 more PayPal accounts is the answer, Nick. I would be waiting forever to get to the money to be able to work with it. And I think they already know my name, so they just would put a halt to it anyway. Um, every day, Rick, we're going to be doing trading exercises, or I'll tell you if I'm actually taking a trade in my live account. If I tell you I'm taking a live trade, that means I am deeming it a high probability trade. It is not a signal service. It is not an invitation for you to do what I'm doing ever. But every single day we will have a scenario where we can either outline an idea what the market should do or actually execute on a demo. And I can give you management of that trade throughout the day. All right. Yeah, I've talked to Chris Laurie, but I think I got a little bit more volume coming in. I think that's the difference. Um, yes, it's being recorded. I don't know how to make an algo or an expert advisor to trade it because there's a lot of variables. That's why I tell everyone that, they say I have an EA that, that does this or does that, and I'm telling you, at the end of 12 months, you'll be able to beat every EA out there. You'll know how the market's going to do. See, the EA can't think like the things I'm going to give you to think. It doesn't. There's no way for it to do these things. There's going to be limitations, and you'll see the limitations that are built in that EAs won't be able to do it. They'll be able to trade on certain components, but the way everything dovetails together, you're not going to have it like that. It takes a human brain to be involved. All right, Pierre, this is a long one. If I look at a 4-hour chart of dollar index, looking at candles of August 8th, starting with midnight New York, the following bullish candles that form price. Okay, look, when these are really long, they're best shared with me either through a chart on Twitter and ask me that way, because this is a lot. It's a lot of information, this one. All right, let me do this. Pierre, do you know how to post a chart to the forum? Do that there, and then tweet that link to me in Twitter. All of the forum posts that are there, there's a little Twitter tab. If you hit that, just make sure that you're sending it to me. I'm not concerned about the link in the Twitter being seen by your followers because they still have to have access to our forum. And if they're not getting it, they can have the link all day long. I'm not worried about that. They just can't get in to see what it is, and then I can see better what you're asking. I don't mean to blow you off. It just seems like a really involved question. Thank you. Can the markets be traded profitably with? No, I read that one. And is there any chance you could give us 10 minutes on the S&P next week? Sure, no problem. It'll be on Tuesday though, not Monday. What am I going to be teaching as it revolves around money management? Is that what you're asking? Like what am I going to be teaching about money management? Well, part of what you paid for is in the 11th month. Part of that is how you can actually start your own fund, and you don't need a lot of money to trade with. A lot of the folks that are with me, their concern is I can't afford $150 because I'm only trading with an account that has $200 in it, and I can see the rationale behind that. And my question is okay, where are they ever going to get the money to trade with beyond the money they have in their accounts? And they can't see past that. So what I try to communicate over this last almost 7 years now is that you don't need a lot of money to trade. You can get rich real quick, not even having any money. You can go into the marketplace with a track record, okay, and drum up your friends, your coworkers, okay, and say, hey, look, there's a potential to lose some money here, okay, but if you put in 500 bucks, okay, and put some scratch together, and go in using your understanding, have a real track record with a small account, build that up, then you can offer that same level of management to a higher degree. And believe me, there's a lot of people out there that have a lot of money. They don't have time or interest in learning how to do this. They don't care. They live a fast life, or they're just not astute. There's a lot of stupid people with a lot of money out there, and they all are greedy. So if you tell them, hey, look, I can give you a 15% return annually, they will dogpile on you, especially if you show them a track record that has very low risk. And believe me, they will put hundreds of thousands of dollars per head in your hands. It's very easy to get $1 million fund together inside of a 12-month period. Very easy. Very, very easy to do that. There's some things you have to know when you get involved in doing that. And there's a lot of risk, obviously, because people need to know what you're getting involved in. Isn't like, hey, look, I want to get my money out tomorrow. There's some things that they have to be aware of. But you're going to be taught how to start your own fund, how to manage the fund, how to do all that stuff. And you don't need your own money to do well. And if you get a performance bonus on that, and you get a management fee of 2%, which is your money right from the beginning, whatever you're drumming up in terms of the amount of money that you are managing, if you're aiming for $1 million, okay, you're getting 2% of that. Right away, you got a nice little chunk of change. Just that one time alone, now you have scratch to trade your own money. And you can build up that fund large, as big as you want it to be. And believe me, that part is easy to get. You can get money easily if you know what you're doing in the marketplace, because very few people know how to do anything in the market. But if you have a track record that's astronomically consistent, where you have very low drawdown, very consistent returns, and you aim for a very consistent 15 to 20% a year, and I know some of you all want that a month, but if you just stop and take a look at what's available to you, you can take this next 12 months, really, really invest the time in learning how to do all this stuff, and be able to start your own business and never spend any of the money outside of what you paid for the education being a part of the group. Tons of money out there waiting to be used, not just in Forex. You could do these same things in stocks. I'm going to give you implications on stock trading. I'm going to give you implications on commodity trading, bond trading, index trading. When you're done with me in 12 months, you're going to know everything that I know about trading. So there's every potential avenue for you to go and do either your own trading, start your own fund. You can start your own prop firm. There's no limitations to what you're able to do with this, and you don't need a lot of money. Stop worrying about, I don't know if I can afford this because I'm paying $150 and that's almost what I got in my account. It doesn't justify it. Well, you're not looking at it right. Your perspective is wrong. Because if you understand what you're learning, you are 18 months to 24 months away from an entirely different lifestyle. Way different lifestyle. If you put the work into it now and just relax. Put the TV shows away for a little while. Take bowling night out if it has to happen. Okay, take poker night out. Keep the spouse entertained. You got to be married still. But focus. Really take this as an opportunity that can potentially change your entire life. You don't have to have a lot of your own money to trade with. You just need to know what you're doing. And I'll give you all the steps to do all that stuff. I'll tell you how to market to people that have high net worth. I'll tell you how to do all those things. I've done all these things. Okay, I've done these things. I know what it's like to do it. And believe me, it's easy to get money. It's easy to gain wealth. It's easy to do that. Okay, what's hard is for you to learn how to trade. That's the hard part. I'm going to do my very best over the next 12 months to give you every possible way for you to learn this, the quickest pace, the most detailed way I can do it, and you're going to have all the notes for every teaching that you're supposed to have. In other words, if I was to check over your shoulder for note-taking, these are the notes you're supposed to have. I can't do anything more than that. What needs to happen on your part is you have to study it. So when you submit to that, believe me, I'm guaranteeing you, you have the likelihood of seeing an entirely different lifestyle 18 to 24 months from now. I promise you, if you put the work in, that's a guarantee. So don't worry about not having money in your account right now. Don't worry about being able to make a lot of money trading. That's the least important thing right now. Because once you understand it, nobody can take it away from you. Nobody can take that information from you at all. But you can use this information to do so many things. So many things. All right, guys. Well, listen, I am so hungry. I'm starving. So I'm going to ask you all to allow me to escape. We saw again today some of the ideas that we were looking for pan out. Unfortunately, we didn't get the opportunity to do a demo entry for non-farm payroll, but did you see what we were expecting to see? Did you watch it live? Now, obviously, we've only seen 2 days, okay, and we've been blessed so far. But do you see the measure of consistency that's available, even in a high volatility environment like non-farm payroll? Do you see the consistency that's there? Now, my question to you in closing is: are the markets random? All right, guys. Listen, if you're in the States, enjoy your long weekend. Be safe. There will be a pre-recorded session on Monday. There will not be any live session on Monday. I will be joining my family in observing Labor Day. And we'll be back at it on Tuesday's London Open. Okay, so in summary, before I go, I just want to put this out there as a schedule, and I'm going to put together a tweet over the weekend. That way I can pin it to the profile on my Twitter. Generally, there are no London Open trading on Mondays, ever. There's never going to be any London Open on Monday. There's always going to be a New York session every single day, Monday through Friday. No London session on non-farm payroll Fridays. Okay. There is a London session on Tuesday, Wednesday, Thursday, and Friday. The only Friday exception is non-farm payroll. Okay. If there's a U.S. bank holiday, there will be no New York or London. I'll use those days just for pre-recorded teachings. Okay, there's not a whole lot of them, but we're going to encounter them obviously through the course of the next 12 months. But that's the schedule. Every single day, you're going to either get a presentation that's pre-recorded, or we're going to do a live event. Okay. Again, these events are getting long-winded again, and I don't want them. This is not what I want. I don't want this medium to be like this because they're too long. And if I'm creating an hour and a half, 2-hour video, 5 times, that's 10 hours of content you have to study. You're not going to be able to keep up with it. For those that aren't here live, if you're trying to just keep up with the recordings, it's going to feel like a daunting task, and that's not what I want. So I'm going to be implementing next week more Twitter charts with notations on it. The recordings and the presentations are going to be, okay, getting in the presentation, showing what my expectations are, the commentary. I'm not looking at the comments or questions anymore after today. So please don't be offended. I don't want to use the time that I'm using in this medium. I would rather do those things on Twitter. It's much easier for me to answer quickly, and that way, yeah, you all will see the questions that are being asked because it'll be in the Twitter feed. And I think that's much more user-friendly. And it's easy for me to get to your questions faster, and I won't miss any because they're there staring at me in my face. So the live presentations will be no questions, no comments. I won't even look at it. I'm just going to turn on, share the information, share the levels, what my expectations are, and we'll be monitoring and managing it through Twitter by charts or comments. I'm going to also start doing if there's a demo entry or a demo limit or a target, they will all be going through Twitter. So my expectations are I want to have that in a Twitter feed post, then put a video together where I can show you commentary of why I expect what's going to happen. but you'll already know what I expect in a Twitter chart or commentary. So even if you can't make it to a live event, you can follow along in your demo account and do the same thing there, and we can learn that way. The video will just be giving you the backbone of why I believe what is expected to happen. So it gives you some flesh around the framework that I'm giving in Twitter. Y'all agree that's a fair way of doing it? Awesome. Thank you very much. Well, I certainly do appreciate your attendance and your interest. We have a lot of exciting stuff to get to over the next couple months, but I'm going to close this today. This will be the last jawboning one you got for live sessions. We got to keep these things real concise. I'm aiming for 10 or 15 minutes, and because we're specifically aiming for trades, the teachings will be in the long-winded stuff. That's where I'll get long-winded. But in the trades, I can't spend that much time, and they're very distracting to answer questions, and it takes my mind away from focusing on the marketplace. So right now, I didn't do any trading this week at all with a live account because it's been demanding on my attention. But if I do this every single day, I'm going to be honest, I'm not going to have it in my own trades. I won't be able to trade live my own money, and I want to trade my money too. So I got to keep the sessions short, concise, deliver the content that way, and aim for about 10-15 minutes. That way it's easy for you guys to just digest that real quick, even in your lunch break at work if you're sneaking. The schedule also, I gave you the days that I'm going to be doing it, but the times are always this. 1 o'clock in the morning New York time is the London Open. So in other words, expect for me to do a live session or start tweeting around 1 a.m. in New York time through 3 a.m. So in other words, I'm giving myself a window of 1 a.m. to start all the way to 3 a.m. We're done at 3 a.m. There won't be anything past 3 a.m. So either you have everything by then, or I'll tell you there's no trade. In New York, it's 7 a.m. That means start looking for tweets around 7 a.m. or expect a live session at 7 a.m. all the way to 9 a.m. It can go a little later into 10 a.m. depending upon what the market conditions are, but usually the schedule is going to be 1 a.m. expect something, New York time for London, 7 a.m. for New York. Let me say that again. 1 a.m. New York time begins the window for ICT analysis and content. That's the London Open pre-market commentary and expectations. New York, 7 a.m. will be the ICT New York session. Expect tweets and live sessions to begin at 7 a.m. You'll know by way of Twitter if it's going to be just all tweets or if it's going to be a live session. Obviously, any pre-recorded session will be linked to you through Twitter. I don't know where I'm going to go with the list of links, but all the presentations that have been made this week, they are all in the Twitter feed. So you can find them just going through my tweets. I don't have a whole lot of tweets, and no, I'm not deleting any tweets, so just go through them and you'll find them. Like anything else, when you get the links, bookmark them, save the file to your computer. That way you can record it. I'm sorry, not record it, but you can have the recording in your computer and watch it at your own leisure without going on the internet. And with that, Munchkins, I'm escaping. I will give you a recap tonight, probably around 10 o'clock. It'll be posted, so we'll give you what our expectations are going into next week. And until then, have a good weekend, be safe, and good luck and good trading.